Good evening, everyone. This is our second Dean's Distinguished Speaker Series talk. I'm so excited to have someone here very special. He's a true leader. He's very well known. Those who invest will never miss this person. And more importantly, I met you 3 years ago during COVID time in a restaurant. And I came out and saying, can there be a person nicer than him? And I truly mean that. He's extremely approachable, very friendly, and you'll see why. The only show I watch every morning is CNBC. Maybe a little bit of local news, but it's CNBC and back to work. And you see Dan often on CNBC. And one day I switched to CNN. You're there also there. I said, wow, I follow you. We don't see too many people having their last name as with the ETF as well. I use his ETF. And more importantly for us is he is our alumnus who graduated with an MBA in 2000, year 2000. I don't know whether you recognize any faculty here or not. I don't know. There's only one who might have taught. No, Joe? Yeah. He got his undergraduate at Penn State, BS in finance. And I saw your picture in the football.
Yeah.
Not a good season.
Not a good season.
Yeah. So let me welcome Dan Ives. Thank you for being here. I'm going to quickly introduce, there's no need to introduce you. Most people know you, but nevertheless, Dan is the managing director and senior equity research analyst at Wedbush Securities, where he also serves as the global head of technology research. In June 2025, something dramatic happened. Wedbush launched the Dan Ives Wedbush AI Revolution ETF, which is called IVES. This ETF capitalizes all about AI technology revolution, the entire supply chain, from the chip to the software developers, to the cloud service providers, and the users like Tesla. It captures all of it. And if you had invested in that, I think it was one of the fastest ETF to hit $1 billion.
Yeah,
It
fast.
was the fastest to hit $1 billion in less than 5 months. And if you had invested in that, you would have been far richer than investing in QQQ or XLK. Yeah, XLK. So QQQ at that time was 20%. I think you are at 38% return.
Yeah, I think it's up from about 20%.
Yeah. You know, I did have IVS before it became this IVS. The other previous one, I had good return. Thank you. That was a different one, ETF. Before joining Wedbush in 2018, Dan built an impressive career that began as a financial analyst at HBO and later as managing director at FBR Capital Markets, where he spent 16 years leading coverage of the enterprise technology ecosystem. Beyond the research world, Dan is a globally recognized commentator on technology and markets. How well he's known, when I posted online, I had many deans contact me. How did you get him? I said, he's our alum. His insights are featured across major outlets, including CNBC, Bloomberg, CNN, Fox News, BBC, and countless others. He has been quoted widely in Wall Street Journal, New York Times, Financial Times, Guardian, the Time magazine, and the list goes on. In 2024, something dramatic happened too. He was even named the best dressed man on Wall Street by New York Post. And this morning, I had a tough time finding a suit that can match yours.
I thought you were going to go like a pink.
At least I'll get my pink suit. Then I had worn my blue shirt. I thought it doesn't match, so I went with blue. Please join me in welcoming a warm welcome to one of the finest gentlemen in Wall Street and one of the kindest and nicest person in Wall Street. Welcome back to Business School. I don't think I've given such an enthusiastic welcome to a lot of others because I know you.
No, and this is something we've talked about this for years. Like I think like when you first came, we talked about this. So it's just I'm just so excited like to be back here and to be doing this. Also, it's such an exciting time with tech, AI revolution.
Yeah. So we do ask our audience to give questions, and I got questions that span the entire bandwidth, varied questions. That is, a lot of students asking, preparing for the future with this AI revolution. How do you prepare yourself? What does the future of work look like? How do you value firms in the AI age? That's a lot of them ask that question. Is the investing behavior changing with the AI and AI revolution. What is the implication of this AI revolution given the geopolitical tension that's happening with a lot of constraints on tariffs and constraints to export technology? How does that value chain work and what is it? And I know you visit all over the world. We'd love to hear that. How is the broader market itself is changing? One very nice question is, much of the growth has come from few stocks.
Yep.
What does it mean to rest of it, right? And there was one nice question that is, will AI create jobs or destroy jobs? When will it start to create jobs? And I think there's a lot of paranoia in the market, including in higher education. Oh my God, gloom and doom. And it keeps repeating every so many years. And then we have no people to hire after some time. There are questions about energy needs with AI revolution. What is going to do to sustainability? Some of them even asked, what is the value of an MBA?
Sure.
And then what about quantum? And love to hear that. And finally, there was a big set of lot of questions. I can guess what it is. Are we in a bubble? When will this bubble burst? So there are lots of questions. So before starting, since this, we have a lot of faculty, alums, and students, but majority of them are students. So I'm going to ask a few questions about that they may be excited. You can inspire them, and then.
And again, the goal is like I like these things to be like where people like walk away like learning something like for them.
Yeah.
Too, like how it helps them, whether it's like career, whether it's your PA, whatever it may be. You know what I mean?
Yeah.
Because too many people just like they talk of these things and like you leave and you're like, dude, that was such a waste, like hour and a half.
Yeah. Well, let me say, so you have become one of the most recognizable tech analysts on Wall Street. How did your journey begin? And how did it take from what you did in MBA here to that path?
Yeah. And also, it's like a good example of like everyone has a different path. Like my path, like some people's path is just like glide path. Like everything just sort of works out. Like they get an investment banking job, maybe like out of college, and then it becomes this sort of like lockstep sort of career. Mine was different. Like I came out of Penn State, like I couldn't get a job on Wall Street. I was like a good student, but I wasn't someone that was gonna like hugely stick out like academically. I did have a great fun time at Penn State, but and then I did corporate finance, HBO, and then basically like when I was at HBO, this back in like or mid '90s, I realized like, look, I need to get an MBA to kind of pivot. For me, it was like to really to get into Wall Street. Stocks was always my passion, but I couldn't get there coming out of school. Came here, and this really launched me into that realm. I felt like it was going to give me all the building blocks that I needed to understand stocks. And being here, there's like really like you go back to like 98, 99, like dot-com bubble, tech's booming, especially like AOL, Dulles Toll Road. And I basically like FBR, which is where I started. Like I started like intern there and ultimately started working there. But I had no knowledge of technology, just to be clear. A lot of people now like, oh, you're a technologist. I literally had little understanding of technology. I started covering tech in the 90s and basically really needed to ramp on every part of technology from an outsider perspective. As that happened, if you go back to like 98, 99, 2000, 2001, 2002, of course, bubble, but yet I just kept ramping my whole sort of understanding of the technology and also being able to also like do it in a way that, like to understand stocks. At the end of the day, there's so many people that understand technology. They could do the best spreadsheets in the world, but literally, like, they couldn't pick a stock if their life depended on it. My strength has always been being able to pick stocks. Because in this, I also like the job where it's not about like performance reviews and all the. You're either good and you get paid extremely well, and if you're bad, you just get riffed and they show you where the boxes are. So I always enjoyed being in an industry like that for me, and I think what really put me on the map globally was being like, basically one of the first to identify how big Apple, the iPhone was going to be. And then getting to know Elon Musk very early on in his career and basically betting on Tesla. So I think for me, like that's what put me on the map. Because you also have to make calls, right? There's a lot of people like in these roles. If you ask them if it was raining, they talk for an hour and you wouldn't even know if it's raining. Like again, like if you were next to me in like on a red eye, you jump out over Kansas or like in a parachute. So I'm a very kind of like, you know, we don't mince words. And I think that's our career has really been defined as kind of brick by brick by brick building it.
Sure. But do you use a lot of your intuition or it's data driven?
I think for me, like 70% is probably more like the work we do combined with intuition and building a very strong ecosystem. Like, I mean, look, I've traveled like what over 3.5 million air miles the last 25 years. So like, just being around the world. So you have like a very strong network. And I think that's given me the ability to like have a very good understanding of the things that are going on, as well as especially investor psychology. For me, having a high EQ has been more important than having a high IQ. And I think that's helped me a lot in terms of like my style, the way that I call stocks, but also communicate it. Like when you talk about things like publicly TV and having like a big like global presence, I think like my personality lends itself to that, but I know others like look, they're dry as the Sahara Desert, right? And the reality is like they are phenomenal spreadsheets. They are like some of the smartest people I know, but they don't have the personality where maybe that suits them. So I think in this job, it's everyone has a different sort of MO. And I think that's what makes at least is on a Wall Street side exciting because you don't have to be square peg round. You could kind of be your own person in terms of your franchise.
So but you're dealing with AI where still we're not even at the inflection point of this usage, right? So how do you make your predictions? What is that?
I'll give you an example, like, knowing Jensen early, okay? And I'll just go back to like it's 2022. This is a real example. The two worst years I've ever had in my career were 2008 financial crisis, 2022. Because obviously market was a disaster for tech, macro, Fed driven, everything that was happening. I was basically out to dinner in San Francisco. It was like November with a bunch of AI engineers, from big tech companies. And I basically left that dinner being like, it's not even a question. This is going to be a revolution. And that's where I coined this is going to be an AI revolution. Now, first, when you say AI revolution and stocks are getting crushed, they're like, what? Like, what are you smoking or drinking? Like, what are you talking about? But it was a true belief that you just needed a silver bullet. And when Microsoft when they basically made their investment in OpenAI, in my mind, that was it. Like it was on. But it took time for that to play out. But it was like every day, like this is it. This is it. And look, and that's how like investors around the world that have followed me, they just understand the way I look at stocks and the work that we do. Haters hate, right? So there's a lot of, I always say, like, there's a lot of bears in the basement when mom's bringing meatloaf down to the basement as they're on the keyboard, for dinner. They've been bears for decades, right? Bears sound smart, bulls make money.
That's a good one. You talked about haters.
Haters hate.
Yeah, and my research is when we analyzed Yahoo message boards in early 2000, all the haters came together, all the bull people came together, and they never talked to each other. So we start to see homophily even in that environment, even where the only goal is to make money.
But also it's like, my view is like, my whole job is to make people money. So a lot of times, like, I'll be someone, they're like, what about, like, what does this mean for like society and all these things? I'm like, look, you want to talk about that? Like, go to the United Nations and talk about it. That's cool. Like, have fun doing that. My goal is like, how do you make money in stocks? And I think that's the reality, is like, that's what I do, right? Like, so sometimes people have like these very like, well, what about in decades? I'm like, look, man, at that point, like I'll be on a golf course like in Ibiza, and I'm not really focused on it. So it's just trying to like, it's put in a way where investors they can make money from it. Like my goal, like when I do something like this, people walk away like, what are stocks that you own? Like, how do I make money? Like for my career, like what does that matter for like internships, for jobs? And it comes down to like, when I covered internet, everyone's like, dude, there's gonna be no jobs with the internet. So, and I'm like, okay, so just think about it. It created Silicon Valley, the biggest asset in this country, in my opinion, right now. So when you talk about AI, for the first time in 30 years, the US is ahead of China when it comes to tech. So much of my life, I'll be in like Taiwan, China, watching fabs being made 18 hours a day where like they don't take lunch breaks. Then I land at like New York Airport and there's some fist fight at Dunkin' Donuts. And I'm like, dude, we are so screwed. So, but now for the first time, US is ahead of China when it comes to tech. It's a revolution. So when it comes like AI is going to steal jobs, see, I disagree. I actually view it as like, so many cities that I've been around in this country that had 75,000 people, now there's 20,000 because the factor left went to India, Mexico. They have drug issues, education issues. The point is like the investments that are happening now. It's a revolution. It's a fourth industrial revolution. So I'm not saying that there's not going to be certain jobs where they ultimately, they suffer, but I think no technology in the last 100 years has ever been a net job detractor, and that's why, like at universities, and I speak a lot at universities around the country, it's like AI is like embrace it, and how could you equip students for 4 years to be better educated. A lot of times, like let's say we do, like at Penn State, we do like the AI Innovation Center, my wife and I, because I'm believing, like me and you have talked about, like it's so easy in universities, but like, what about the athlete? What is it? I'm like, look, you got to equip students in this new world, whether it's, building out, use cases, like having like programming technology, having those skill sets are so important.
Yeah. But thank you for being very frank about your views, because it becomes very hard to say the truth sometimes.
But that's how you have to, right? There's so many people like they talk about things in a like, well, then like, dude, they speak like dialects of Mandarin? Like, what are they even saying? I don't understand. So it's like my whole goal is like, it's a very clear view of where we are, and it's a clear view of like, I think like the opportunities. Like I think like it's a tech bull market for another 2 to 3 years. The bubble moment, like look, many people have called like bubble, bearish, this. I know how this ends. It comes down to this. You are in year 3 of an 8 to 10 year build out of the AI revolution. If you have an 8-year-old today, they're not going to need a driver's license when they're 16. Humanoid robots are going to be a reality. I'm not talking 10, 15 years, like in the next few years. Like you're going to have flying taxis at the Olympics in LA in 2028. The point is like that's the reality of where we are. I'd much rather own tech stocks in the left lane in a Ferrari, Bugatti, going 100 miles an hour, get speeding tickets, I get it, points in the license, then own value in the right lane, a minivan, going 45 miles an hour, the bumper sticker saying my kid was an honor student in 3rd grade. That's my view.
Okay. There's a lot to unpack here, but let me ask you, the question that you brought about China. Our staff, our faculty went to China. They are factories with zero defect.
And I was just there like 2 weeks ago. Yeah.
Yeah, I did see that you're in China. In fact, that company is going to come to Dallas to produce. And I asked them, isn't it cost of production very high here? Well, we won't have many people. It'll be all robotics, completely automated, zero defect. So whether I do in China or here is same thing. That's exactly, this is a Chinese owner, also an alum of the school. It's a $15 billion company, and they're coming to US to produce because they're going to hardly use human beings. And they have zero defect. That's unheard in a manufacturing environment. So if argument is we are ahead, US, is there evidence that we are ahead? Because they may not talk too much, we talk a lot.
Yeah. I mean, there's one chip in the world fueling the AI revolution. That's it's Godfather Bad Jensen NVIDIA. Huawei compared to NVIDIA is like White Castle compared to Peter Luger's. Like if you're so the reality, like that's the just reality. And when it comes down to like China, like they're advanced in like robotics and energy, but it's not even a question. US is ahead when it comes to from Microsoft to OpenAI to everyone. But it's also why the geopolitical. Trump knows he holds the cards relative to Jensen here, Karp here, Altman over here. That's the reality. I mean, they know that's a huge advantage for US when it comes to negotiations with China. China, like rare earth and everything else. That's why China backed off because they recognize, like, I know so many people like Alibaba, Baidu, Tencent. Who do they want to use? They don't want to use Huawei. They want NVIDIA. So it just comes down to like that's the reality of where we are. And it's also an arms race, US versus China.
Oh, that's, I will let others who had lots of questions to ask. I'm going to ask a few more questions here.
We'll make it like real interactive. And
I'll that's what I like. I have students and faculty. Actually, I have faculty too have some questions. How do you separate the hype from real opportunities? Because in internet time, if I'm correct, there were over 10,000 B2B companies that went public and only about a handful survived. Most of them died.
But so let's just like compare, but if you compare those periods, like the average tech company was trading at 30 times revenues, today is 27 times earnings. Back then, it was like managing teams, you wouldn't want babysitting your kids, PowerPoints galore. They were levered business models. They didn't have today. It's being run by basically big tech with $1 trillion unbound and 300 to 400 billion a year of free cash flow. But the main thing is like AI. It's the true fourth industrial. It's not a question of if. It is like as it's playing out. And in terms of hype, look, just because a company says AI 30 times in a conference call doesn't make them an AI player. There's many private companies like I'll meet with. We sit there, it'll be like an hour, and I'm like, they're calling themselves an AI company, but it's basically the equivalent of like a legacy company just spicing things up and saying that they're AI. So I think you have my whole job as part of like the ETF, it's separating like the winners from the losers, like what's real, what's true, where the spending is going to be, like how, like from hyperscale. Because I'm really focused on like what are the second, third, fourth derivatives of AI, whether it's robotics, energy, nuclear, cybersecurity. So that's what I'm so focused on.
Oh, okay. In fact, this is a question from, I had that question, but somebody posted the exact same question. Oscar Aldano, I don't know. He's actually an alum who asked that question.
Nice.
But it's a question about circular deals. What is your view about this? And I believe that there is a circular deal, and you can explain what it means. And is that real or is it?
Yeah, and the circular deals, and also, but it also goes back to the historical where, like in the 90s, vendor financing is basically like, I'll give you something, you give me something, it's revenue, but we're not really paying for it. And like when you look at like the internet boom and bust, vendor financing was always viewed as like one of the culprits. So here, circular financing in terms of OpenAI being like, okay, AMD, we'll get a 10% stake, we get this revenue, but is it really revenue because you're getting a stake? Same thing with, if you go back to like, if you go to Oracle and so many others. See, I don't view it as circular. The reality is like OpenAI has, I mean, and they're basically going to have capacity from a cash perspective, what will ultimately be like 800 billion to $1 trillion. They're building out an economy from the ground up. I mean, that's essentially what's happened. This is Vegas in the 50s, dust. It's Dubai, no buildings. This is collaboratively what's essentially happened in terms of the build out. So I don't view it as like this sinister red flag, circular deals, negative for tech. I actually view it much more collaboratively in terms of how it's being built. And also for OpenAI, for every dollar that they put into NVIDIA and AMD, they get $12 to $15 back. So that's why I don't view it in a more negative sort of view. But remember, in this market, you're gonna like it's always like haters hate or whatever, but like any little like speed bump or like so, you'll have everyone come out like this is it, the bubble. They'll be on Twitter, this, the whole thing. The reality is like we've said it, like it's an AI party that started at 9 p.m. It's 10:30 p.m. Party goes to 4 a.m. Now the bears will look at the party, like we're in Vegas, through the windows, packed park, and they're like, it doesn't even look that fun in there. I'm gonna go up to my room and read a book. Bulls and Bears meet up at 6 a.m. Bulls had a lot better night than the Bears. And the reality is like, now look, I'm not saying like there's not glass on the dance floor, DJ stops playing music, cops maybe come a few times like for the part. But the point is like this party is going to continue to play on, and the Bears will continue to watch it through the windows.
That's interesting. So let me do, and there are lots and lots of questions. I'd rather have. I'll just open it up. You can. Why don't you students or anybody wants to ask questions? Please come to the mic. Tell your name as well.
But I think a legit question is why, like, are you going to start wearing more color in your wardrobe? No, but I think it's a legit question.
I know. I was so stupid. I'll tell you.
But you are like, you're very tech centric, like your Austin background. Like you could pull that off pretty good too.
Yeah, I admit. Yeah, I was wrong. Yeah. Yeah. Go ahead.
First of all, thank you so much for coming to speak with us. We very much appreciate it.
Yeah.
My question is, does Matthew Berry shorting NVIDIA and Palantir have any effect on investing in technology stocks for the average investor? Obviously, you're not the average investor, but...
No, but like Burry, like if you look at Burry, like because like Big Short and the whole thing, like in terms of, like, does that make... Now, ironically, like Steve Eisman, I'm good friends with, and he's actually a bull. We were going back and forth today, like he's bull. So it just goes back to like Burry, whatever. Look, Burry's someone where like, first of all, he's been, if you look at like his call on Palantir and NVIDIA, right? Like, I mean, it's been the exact opposite in terms of how it's played out. But it's easy that you're gonna throw like kind of like match where there's hay and gasoline. It's gonna be like it's gonna cause obviously nervousness out there. My view is like, look, he obviously an illustrious in terms of his able to whatever Big Short and back in 2008. This is just a total different game because the reality is like you have more money being spent in the next 2 to 3 years than the last 10 years combined. Wow. That's factual. Now, I'm not saying that you're not going to have some froth on certain names, but to sit there and say like that's a bubble, it's the exact opposite because I think maybe a year ago or a year and a half ago, and there were many that said it, but now the validation's there. Look at the use case. Look at what's happening in NVIDIA. I mean, like right now, demand to supply for NVIDIA chips is 15 to 1.
Wow.
Demand to supply. So if you're telling me all those CIOs and all those, IT departments are wrong and he's right, I'll take those 1590 SATers anytime over Bert relative to my. But again, haters give other opportunities where stocks sell off. It gives you more opportunities to own names. And there's so many investors, right? Like, you could easily miss names, risk off days, like get people yelling fire into a crowded theater. It just creates the opportunities to own your winners.
Yeah. Thank you so much.
Yeah,
Thank you.
great. Can I ask you a question on that? Is that investment people are throwing these numbers, $500 billion, trillion, and people are throwing numbers like crazy. Is it to please the person in the White House 9 miles from here, or is it real that they're going to follow through with that? I mean, these are staggering
Well,
numbers.
well, first of all, the reality is like you either play nice in the sandbox or it's not going to be a good time for that company. And I think everyone's fully recognized that. Be like, that's crazy. This dude's like, my name's Dan. We drive on the right side of the road. It is what it is. Like the point is like companies have adjusted to like the new environment. When you look at like the real spending, it actually is real investment. Now, are there some investments that would have already been there? Yeah. But there are real and there you're talking about like whether it's international to please whatever kiss the ring or companies, it's real investment. And the way I view it, that is really going to create. I'm not saying you don't have like a soft patch in between where like a transition period, but it's going to create like a massive innovation cycle in this country. That's just the reality.
Just more on the infrastructure side.
Well, it's all in the infrastructure because look, if you're building a data center in Wyoming, they're building that data center. And where are they going to restaurants? And then where are they staying in hotel? The point is like the ripple effect here is pretty staggering relative to,
Go ahead.
Yeah.
Thank you very much. A pleasure to meet you. Thank you for setting this up with Dan.
Oh, great.
So I just had two questions. One is I'm a little nervous, sorry. Regarding the data center build outs. Listening to some of the interviews by like Jeff Dean, Noam Shazir, the Google guys, or like the Anthropic infrastructure folks, they're like, this is one of the biggest infrastructure build outs in like human history. And I was just going to get your take on that. Is that like, it doesn't seem hyperbolic because like even some of the engineers are like $1 trillion, $1 quadrillion, you know what I mean? And so that data center build out, they're claiming 100, 200, 300% a year. How long could that go? 10, 20, years, maybe to 2045. I don't know. That was good. Trying to get your take. And the second thing is retail investors in relation to like public markets. I'm understanding that it's getting a little bit more difficult because a lot of companies are staying private, like OpenAI, Anthropic, and so that getting that exposure, that economic growth, either has to get through indirectly, or something like that.
Yeah.
So it's going to get, and of course, the index funds with Glass Lewis and ISS and stuff. So if you had any take on retail investors,
those are great questions. Look, there's some data centers are going to be half the size of Central Park. I mean, the reality is like only three. If you think about it, there's more data centers under construction today than active data centers.
Wow.
So that's not a like it's real. Now the point is like, does it ever end? Yeah, it's like, okay, there's 3% of companies in the US that have gone down the AI path. When you get to 20%, you basically the energy, it's like rubber means you basically don't have enough energy after 20%.
Wow, okay.
The biggest constraint in all this, it's energy. I mean, that's why it's like my view, like nuclear, whether it's grid enhancements, what's going to happen with natural gas, solar, nuclear to me is going to be the real, like, that I think is going to be like the golden goose in terms of there. So it's not hyper. I mean, it's real. Now, look, it goes back to you have like private companies like Anthropic, XAI, OpenAI, which will be public probably 2027. Because companies have so much more funding, so they can stay private so much longer. But the reality is, like, private company, and you see it every day in New York, NYSE or NASDAQ, like, private companies, ultimately, they're going to need to go public.
Ah, gotcha.
So I think the reason so many were staying private, if you go back to the last 3-4 years, valuations weren't there. There wasn't the appetite. And I think a lot of that's changing. So I think you're going to have a surge of companies that go public.
Awesome.
But everything's changing too in terms of like tokenization, the ability to invest in private companies, retail, like also like a democratization, whatever. Like the retail investor 10 years ago, I'd even say 5 years ago, was viewed as kind of like, yeah, it's like a sideshow, like Mosquito and the strawberry type thing. Now, they're no longer like at the kids' table, like at Thanksgiving. They're like right there with institutions. And I think like if you look at a lot of names, Palantir, Robinhood, Tesla, I mean the list goes on. Retail has been ahead of institution.
It's awesome.
And that's why like I think information flow, like if you're on like Twitter a lot, I mean, the amount of people that I meet around the world that like have made significant, wealth, a lot of it is like as retail information flows out there, it's even the playing field.
Yeah.
So that's why I like a lot of times like there'll be like a 14-year-old like, yeah, I just wrote a book and like I'm thinking about quitting school because like I made like $1 million. And I'm like, dude. So the point is like, but that's the beauty right now of this environment.
Yeah.
Cool. Thank you very much.
Well, the next question,
Great.
keep it short, the questions. But while you come in, your talk on CNBC about the energy is what made me look at OKLO.
Yeah.
By the time I could go, it went from 20 to 190, and of course it fell. It's amazing
of
how
course.
the nuclear thing just took off.
But Aqua has been our favorite, but that's just the start of more nuclear and fusion plays that are going to be coming to market.
Okay.
Yeah, I had a question about the AI boom. So I'm a CS major. So one of the things is that AI has been out for a long time. It's just only now that large language models are getting smarter. And there's this like argument that like large language models can only get so much smarter because of scalability. They're just making the models large, they're having big data centers. But at some point that starts to converge, as we are seeing, cloud models, XAI, OpenAI, all are starting to converge on the benchmarks. So like at some point, it's like it's not that the AI bubble will crash, but like almost like we have reached kind of the peak with LLMs and stuff like that.
On the LLMs?
Yes.
Yeah.
And what happens to the whole AI landscape, because you have a lot of exposure to like people. I'm thinking smarter people than me have thought about this. So what happens when like, when you realize, the public realizes that like kind of like LLMs have kind of reached their local maximum. And what happens when you like kind of like the whole AI industry as a whole?
I think like it's a great question. I think, look, to me, the value is going to be in the data rather than the LLM. Models are going to get cheaper and cheaper, better and better. Even though DeepSeek was a fake story or whatever you want to call it, relative, the reality is like models are just facilitators for what I view as like, look, when I talk about AI, like the biggest use cases are going to be like autonomous, robotics, like humanoids. That's when you think about just like ChatGPT, the model, that's like tip of the sphere. Enterprises, if you think about it, 70% of data they've never been able to access. Now they could access it. So I'm just saying, like, to me, it's all data driven. And to your point, why do you think OpenAI, they're investing in AMD, NVIDIA, Oracle, Broadcom? Because they know the model is just the tip of the sphere. Great.
Wanted to ask about Quantum. Are they at the party or is this a sideshow?
No, they're Quantum's at the party. They're by like bottle service, like in the back. Like they're kind of, I mean, to me, it's like, that's why like IONQ, Reggae, because there's like a whole debate. Like, is it a quantum bubble? Like, can they get this scale? You know, Jensen obviously like last year at CES, basically saying like it wasn't going to be at scale. Look, quantum is going to be, it's going to be like a revolution for quantum names. I think it's just from a valuation perspective, it's going to continue to go through these sort of evolutions. But IONQ has been our favorite in terms of as a pure play. Look, as I always say, like you don't want to look at quantum names on risk off days. You don't want to look at your PA and on risk off days. But I think quantum, they're at the party upstairs, bottle service.
You've talked a lot about bears looking for moments to criticize and finding news stories to shout fire.
Can you speak on the my mic?
Yeah.
Sorry. Do you foresee there to be an achievement or a moment where even the bears realize, hey, maybe this is for real?
Sure. But first of all, you always need the bears. Like you need the haters. It's part of it. Like just like the Burry thing. Like you need, because in a market there's bulls and bears, right? Like so you need that. I do think like the bears have recognized the last few years. That's why some of them have gone. Like to be honest, I had to like, you know, I was getting nervous about some like, you know, like a lot of the haters like on X that like I hear from all the time. I almost had to like, you know, do a checkup on them because I haven't heard from them in a while. But the thing is that it's what makes a market, right? But I think when you look at the spending, it's part of where like you look at short interest like went significantly down. It's clearly now starting to come back up because now investors are okay, I'm gonna take my stand. Like this is above, and you're gonna like it's gonna be a continued battle on tech names, but that's what makes it like an enjoyment, right? Like the point is like what makes it so fun in terms of that is like if you're right and you do the work and you have conviction, those moments make it that much sweeter when you get to the other side.
Thank you.
Yeah, great. Well,
Thank you.
yeah, great.
I would like to know, as a Terp yourself, how has UMD's ecosystem influenced your views on Maryland's roles in tech innovation?
Yeah, I mean, look, it's like I say, like this played a huge role in my career. I actually think especially like here at Swin, they always were like pretty advanced when it came to like entrepreneurship and like technology. And I think that's something that they've been able to like keep that sort of edge. I view it as more of like it's more of like an edge. Like it's more of like differentiating yourself in a way where if you look at a lot of people that have come out of this school, it's not surprising. Like there's so many successful people that have come out of here because I think it creates a certain sort of like DNA. I mean, I'll just give you an example. Like, okay, a lot like if you look like CVent, which everyone knows today. If you go back to like the Agarols and you know and everything that they built, when I was graduating, CVent was like a Series A seed company, and they came here and recruited, and a lot of classmates went there, but that at a lot of other schools you wouldn't have done that. You would have just done cookie cutter like Booz Allen or banking, whatever, and people that stayed through the round, through the IPO, through this, you know, now like I'm trying to hitch a ride on their jet from Miami. So I'm just saying, like, I think that it's created that innovation.
So David Cawthron was
Yeah.
also did MBA, CVAT,
Yeah.
yeah.
But yeah, but if you could see then like so many of the successful people that have come out of that were
So
here.
you're going to say this on CNBC sometime?
If you get a little more color, yeah.
Sure, I will, anytime. You tell me, I'll wear it.
Exactly. Like some pink, purple.
Sure.
Some purple.
Purple, I don't know, but pink, yeah.
Yeah. And I have my clothing line, so I'm gonna give you some of my shirts.
Absolutely. No, I think this is a great, your points are well taken. I think it's underappreciated that Sergey Brin is actually from University of Maryland.
Yeah.
And they keep saying Stanford. No, he's from here. So, and Oculus co-founder is from here. And
But also, it's like I'm like, and this is more like my bias, just going to 2 Big Ten schools, for undergrad and grad. And it's just my view, like kids that come out of Big Ten schools, it's a certain type, and there's like a generalization, like there's like an edge, there's like it's like an EQ, IQ, like they're plug and play people. They're willing to take risks. It's like I actually think like I'm very biased. Like kids that come out of Big Ten school, I'm just being fully out. I think like 90% of people I've hired to come out of some Big Ten school because I think it creates when you're successful in these environments. When you go out into the real world, it's like drinking a cappuccino.
we love that. We'll take it. I wish this was recorded. I don't think it's recorded. We would have taken that part.
Yeah.
Thank you. But we have more questions. Go ahead. Can you say your name as well?
Yeah. Nice to meet you. My name's Karthik. I'm here representing the Smith Investment Fund.
Oh, great.
So you've talked a lot about how the U.S. is leading in AI innovation. How are we leading with the energy to demand for that AI use?
That's the biggest constraint. Is like the energy is going to be the biggest constraint in terms of what I see, because that's why like nuclear is going to be so important. Like it's almost like a national sort of, I wouldn't say it's like a national like moment of, but I think you're going to see like states are going to look, they'll play both sides of the fence, right? They'll be like, we don't, because there's obviously going to be like data center issues, but they're going to want those data centers. They're going to want to construct, they're going to want tax dollars. But a lot of it is, I think nuclear is going to be like, that's going to be the path in this country, especially when it comes to like different types of nuclear fusion technology. There's really an arms race going on relative to China. That's the biggest constraint, power.
Thank you.
Great.
One more and then I'll continue.
Yeah.
Go ahead.
And I guess, and also I'd say like in power, like part of the problem is like, the infrastructure in this country, like it's just because of the grids. I mean, if you look like Northern Virginia, they're basically already at their max from a grid perspective. So it's like that to me, that's why you see so much of the build out. Where is it? Wyoming, South Dakota, Montana.
All right. My name is Neil, and I'm a first-year master's finance student. I have a question and a comment. So my question is, you bring up OpenAI. They had a report in 27 that they may file to go public at $1 trillion valuation. Now, I see that I'm thinking, well, for one, they're a nonprofit. How do they convert from nonprofit to for-profit?
Yeah.
All the while, they have a lawsuit going on with Elon being an early investor in OpenAI. He's taking them to court. I mean, do we think that's going to get resolved before they go public? I mean, if there's a delay, like how long is that going to be?
Yeah. So on the OpenAI, like a lot of those board issues, Sam and those, they've kind of they basically have resolved. So like most of those, the nonprofit, for profit, and they've been able to kind of get 95% of that done. Look, Elon and Altman are never going to candlelight dinner, so that you're going to continue to have those issues. But I don't see a path that stops them from doing IPO, we'll call it 12, 15, 18 months from now, given all those things have now been figured out.
Yeah, and follow up to that, like how do we determine that's a trillion? I know it's an estimate at the end of the day, but
And the best way to think about a trillion is like, if you, because today they're not making money, right? So in other words, like, it's the view, like, okay, like, can you get to, if you think about revenue, like, the view is that they can get to like 400-500, like, you'll basically be able to get to like 400-500 billion pretty quickly, and the profitability on their model would be something similar to an Amazon or a Meta. So I think it's to view, like, when you in that vein, that's how you get to like the $1 trillion valuation.
got it.
But private rounds, their private rounds were like 27 billion, 80 billion, 400 billion. So it's a scarcity value.
And my comment was, I did a look up on your name just on the day of, and I found that you had the ETF, and I had some cash lying around, so I figured let me just buy it during market hours. So
Thank you. No,
just to
seriously.
share early, not a lot, but just to
No,
share.
thank you. It's like, the problem, like, with the ETF, it's like, and obviously, like, I live in New Jersey, and like, so many, like, my town like owns like so many like my top picks. When things are going good, it's awesome. When things are going bad,
A
dude,
curse.
not good. Exactly. It's a double-edged sword.
Yeah, my wife has figured out when my mood is good, the market is up.
Exactly.
That's the way it works. Go ahead. I'll come to you if you don't mind. Yeah. Yeah, go ahead.
Hi, Arya Chaudhary, EMBA 14. So always excited to be back here. And Dean Prabhu, thank you and to the rest of the team for organizing this. And Dan, I don't listen to CNBC, but Bloomberg every morning. So I do listen to you. Two-part question. What's your take on space? And when do you think, I know you are a Tesla bull. When do you think SpaceX or New Origin and others are going to be in the market?
Yeah. I mean, like, look, I've always viewed it that Musk is going to put it all into a holding structure where it's going to be Tesla, XAI, SpaceX. I mean, and he's starting to talk about more and more that because now Tesla's going to probably own 25% of XAI. Look, SpaceX, I mean, what they're also, like, with Jared getting head of NASA, that's a huge positive for what SpaceX is doing. And like myself, I've spent some time there at SpaceX, and it's like, I don't think people appreciate just what they've been able to do, where essentially, like, our space program foundationally is built on what they're doing. I think the big thing also, like, with space, everyone's trying to figure out, like, the Blue Origins and the stuff like that. That's not going to be like the investment area. Like, there's names like Planet Labs that we've liked on like a data side on the space side, but SpaceX, I think it's just early days to where Musk is taking it.
Okay, thank you.
Great.
Go ahead.
Hello, my name is Ner. I'm a behavioral economist, and I had two questions. One is, what are some things that draw you to a stock early before the crowds get in? For example, Palantir at $6. And the second question, you spoke a little bit about investor psychology. What are some observations you've had over your career that you find most interesting, unique, weird, and useful?
Yeah.
And both investor and retail.
Yeah, totally. So, look, like, Palantir, someone like, that's an example of, like, I've known Carp. I'm a huge, believer in like everything that Alex does. But that was when, like, the stock was like $10. What No one really understood what was gonna, what they could do. And that was like, I talked to so many companies that it was realizing like they were on the cusp of like breaking through. And we talk about the messy of AI, and it was really kind of like being the big, like, first public supporter of them. But it was one where it was like, it was seeing the vision, but culturally, they call themselves like Palantirians. Like, it was understanding like the culture, and betting on the culture. Just like I bet on like Elon or bet on Jobs and Cook or Nadella or Jensen. A lot of times, like you're betting on the company rather than you're betting on like the individual to lead the company. You know, and like when you're talking about crazy thing like from like retail, like just different takes and stuff. But your second question?
Oh yeah. Oh, just observations about investor psychology, both on the retail side and the institutional side, because they both matter, and things that you think are your unique observations over the years that have helped you or you thought were particularly interesting or colorful.
I mean, that's why like there's so many influencers now on the retail side. And I think institutions for so long, they just wear their Peter Millar in Connecticut, not focused on retail, smartest person in the room. That backfired, right? So in other words, like, and I think like retail, like they were like a lot of times like they're not even like sports fans. Like on the weekend, like they're just waiting for the market to open on like they can't wait till future Sunday at 6.
Yeah.
So it's like, but it's the work that retail have done. Like if you look like Robinhood, Palantir, Tesla, look in April, May with the tariffs, retail bought that dip. Institutions head for the hills. It's actually so I think there's definitely like psychology things that you could actually use like to your advantage if you're plugged in. Like, look, I spend so much time like on X. Now, a lot of that's for sports. Well, Penn State bad year, so try to spend less time on the sport. But on the from a stock perspective, like you gain so much information on Reddit, on X. And sometimes investors are like, oh, I don't do that. Dude, that's like you being like, I don't eat pizza, go to sushi and drink wine. Like, why is that like a flex? Like the point is like by not doing that, it actually hurts you.
You're saying this, surprisingly, many of us have been working on this since 1998. Can we extract useful information from what people say? Believe it or not, I didn't get a single paper accepted for 15 years. Because
But that's crazy because to me it's like I actually think like I would almost like a big part of my career has been reading tea leaves on social.
Yeah.
And helping sometimes like shape. I think that's like a.
I'll send your note to editor-in-chief.
Yeah.
No, there's a very important thing is the belief is that individual investors have no impact on the market. That was so finance journalists to reject saying institutional investors control the price.
But that was like a very like not like stodgy, but that was like an old school view that's dramatically changed.
He has a question. Go ahead.
Yeah, hi. So I'm a second year MBA student. My name is Pratik. So I have a question regarding like we've discussed a lot about like capabilities of AI have been increasing. So what do you see in the current aspect, like in equity research or other market research or stock picking? Like, has AI models been able to like take the place of people who've been working there, or like what do you think? Like, has AI like does AI need to evolve on to like at least take at least 50-60% of the work that is done in the financial markets?
I think it's been more additive and it's helped, but like the view like AI is going to be able to pick stocks. You're not going to need stock pickers. Dude, I think that's improving these models pretty bad. I mean, in terms of like stock picking, I do think like it could help you with like information flow and data. And there's all different types of like companies now focused on it. I view it as more specifically on when it comes to like stocks I think it's more additive, but not replacement. It's more like it enhances. So like if there's a conference call and I don't want to like go through it, it could pick out key data. But I've also met with so many private companies, and they're like, we do this, this, this. And, it feels like a lot of it is, repetitive.
So just a follow up on that, like, what do you think that AI models lack? Like, is it just perspective, or is there like some other like experience and perspective, and is there something else too?
I think it's both, in terms of, but I think there are some that you could glean good things that actually help your, your ability to analyze stocks.
So we'll limit to one question so we can get more. Go ahead, and then I'll come back.
Yeah, great.
Dean, thanks for having this. Dan, thanks for coming back.
Oh, great.
Ray Wolf from EMBA 5. And if Larry Ellison was standing in the room, what do you think he's doing right? And what do you think he's doing wrong? And full disclosure, I work for Oracle.
Nice. I mean, but if you look, like, thanks for, it's like, look, so many times, like, going to Oracle worlds, like 20, like over the decades, people, like, no one thought that Oracle was going to be able to transform the way they have. Now, a lot of that's like Saffron, obviously, like, what Larry's done. But I think the reality is, like, they understood, I think, starting a few years ago, where it was all going to be the stack. They had to make a huge pivot. And that's been what's changed the company. I think to some extent, like, IBM's done a little of it. Nadella clearly has been like a huge leader in terms of what he's done at Microsoft. But I think Oracle is like, it's changed. I think it's really changed, like, technology, how they've been able to pivot in this way from a stack perspective. And also, like, for a company that basically, like, for all those years was doing so many acquisitions, really this was mining their own install base. And I think that's why, like, the credit that's given to them is all due. All
Just collapsed quite a bit in the last.
But I think that's like, I think if there's a large cap name that I view as like way oversold, it would be Microsoft and Oracle.
Okay.
What is time?
Hello, my name's Elon. I agree about wearing color. It's more fun.
Nice.
I wanted to ask you about what you think your biggest risks are for your investment philosophy and what that's going to look like in the short and long term, and also what the biggest, like, the best steelman of the other cases.
Yeah. And what was that last? The best,
like the best steelman case for the opposing view. Like, what do you think the best good point that the other side is making?
Yeah, that was a smart class. Like steelman, that's like one of those like SAT kind of word. It's like look, the biggest risk is always like when valuation, it's almost like valuations don't matter till they matter. It's like so it's like when all of a sudden, like, you get a dent in a quarter, something happens geopolitical, risk off, Fed, POW, whatever it may be, like, that's ones where, like, those are always risks to your thesis, right? But I've always viewed it as like, it's like my calls are much more like multi-year calls. So when something like that happens, I just view it as like, you just, like, you navigate the turbulence and you name. But the biggest risk are like, all of a sudden you get like a bad quarter. Like, I was giving like CoreWeave, right, which is like a neo cloud, like, great quarter, phenomenal, but like some data center stuff moved from Q4 to 1Q, so you have like a ton of downgrades. Everyone's like, so I view it as like, okay, like, does that hurt near term? Yeah, but it doesn't change the thesis. But that's an example, like, how it hurts. In terms of like the other side, like, to the argument, a lot of it would come down to like how, like, valuation, like, how could this make sense that a company trades at 30 times that, 50 times, whatever the numbers are. But you have to be able, on the transformational tech names, to be able to look out 3, 4, 5, 6 years. That's the only way that you're able to get it. I mean, in my whole career, it's like Meta, if you didn't see what Instagram and what social and what that was going and how they're going to monetize that, you never would have been bullish.
Yeah.
Like at that time.
I missed on Meta. Complete cut off Instagram usage, even though I was using it all the time.
Why not?
Yeah, I missed it.
Well, I think, but Meta's a good example of like underestimating what Instagram and acquisitions were
It
going
was huge. Go ahead.
Hi, Raymond Wananty, MBA alum. My question is, with AI becoming smarter than the smartest engineers and the best coders being AI, do you think Silicon Valley will continue to maintain like a concentration of intelligence or intellectual capital with that intelligence becoming more distributed?
Yeah, I think, look, it's like, it's a great question. It's like, it's a risk because you're starting to see like democratization, but you're seeing more technology sprout out in like Austin, throughout the country, Atlanta, and other areas. Look, I think engineering, like when you see job cuts from like Amazon or if Meta cut, that's just going to give opportunities to other companies to hire those work, and that could create the next Palantir. I mean, I could give you so many examples, like so many people that I know, like Anthropic or XAI or OpenAI. Guess what? Like they were laid off at like Oracle, or they were laid off at Microsoft, or they were laid off at so much. So I think that's something that's going to create like the next tech store. But incumbents, because look, they like when you're giving an engineer $100 million signing bonus, whatever, even though it's like stock, whatever. So it's like they have the money to keep it the top ones in their cupboard, and that's something that's going to continue to play out.
Thank you. I mean, this is a great point. When Amazon dumped drone,
yep,
a lot of the military startups targeting drone technologies for military purpose, they all just went and hired all of them.
No, I know.
Yeah,
It's
it
true.
was.
And then
he's also a graduate who is in Tyson. He said they had people just go to Amazon, bring them to their company.
But it's like one, it's like it just creates more opportunities for others.
I don't know who came here first. I'll go this side and then come back. I think after this 4, we had to stop, I guess, but go ahead.
Hi, Dan. My name is Tushar. So my question is that what's your take on systematic trading / investing for retail investors or traders, basically following up a back-tested strategy and a rule-based kind of a trading versus stock picking? And how do you think AI could help us build better systems for that?
Look, the algos and like, I mean, like, look, you can't fight you have to be aware, especially on like quant trading and everything. But look, there's stock pickers markets. Like, it's like anyone that thinks it's just the algos that's ruling. Look at these last few years. Like it goes totally against that. I think you have to be aware of it, but it doesn't change the core belief that that's a stock picker's market.
Thank you.
Yeah, great.
Go ahead.
Hi, my name is Andrew, and as a bio major, I really appreciate your relatable metaphors. It makes it very understandable. But my question was about stocks and specifically around AI. With all the hysteria with around there being a bubble, how do you know when to hold them and when to fold them?
It's like, look, it's always hard because like in bubbles, because of dot-com bubble, everyone's always afraid. Like once something happens, it's like everyone runs for the elevator. This is it. It's okay. But the reality is like it all comes down to like if the investments continue at this pace, the spending and numbers are going to continue to go higher and stocks are going to go higher. Plus, like Fed is going to continue to cut. You have $7 trillion on the sidelines. Powell's replacement is going to be a white dove, okay, that's going to cut. So the point is, like, that is a bullish market to invest in. Now, look, part of the problem is, like, a lot of times, like, tops, you don't know. I mean, I always joke, like, 2007, like, when I was at FBR, like, we like, the Waste Manager, like, we had, like, you know, which is like a huge golf tournament, Scottsdale, you know, whatever, like, which is now Waste Management. We had our own golf tournaments, 2007. I'm like flying to Vegas 2 a.m, gambling. I'm like hanging out with George Bush, like Super Bowl, like, you know, like police escort. And then literally like 6 months later, our stock went from 30 to 2. So the point is, like, peaks, you sometimes could feel them, but you never know where the peaks are. But this is not there. There's no leverage in the financial market to this extent. So to me, that's why it goes back to, like, at 2 a.m, you could get like, hey, when's cops coming? Now it's still 10:30 p.m. And again, you don't want to be that bear looking through the window, being like, it doesn't even look that fun in there. And they go up to that room and, you know, watch, like, read a book.
Thank you.
Cool.
Okay, last 2 questions. Go ahead.
Good evening, Dan. My name is Daryl Lipscomb. I am a second-year accounting student, master's in accounting. Your bull case for this fourth industrial revolution is built on the massive monetization of AI. But the fundamental economic promise of AI, from automated coding to self-driving, is massive deflation. Isn't that the ultimate paradox? And how do you get a historic profit boom from a technology whose entire purpose is to make cost of intelligence and labor race to zero?
Yeah, it's like I get the point. It's like, to me, it's more that process to get there is where the investments will be. And there's like, on what, like, as you get to one side of it, there will be deflationary, and you will get to that point. But on this point, like the next 8 to 10 years, that's where it's a revolution. Then you will get to a point where it becomes deflationary, intelligence, everything that's actually playing out. But then there's something else, whether it's quantum or applications. Like, when you think about internet, like, look, when Apple made their iPhone, if I told you you're going to be able to watch a movie on your phone, you'd be like, dude, you like smoking a joint in Montego Bay. So the point is, like, you never know, and that's the beauty of technology. But it's a great, I get. Thanks.
Hi, my name's Joseph Scafidi, MBA 08, part-time actually. But first of all, thank you so much for being
Part-time's
here.
even more of a flex. Like, if you could do that, exactly. It's like,
It's not as much fun as you guys, but
I know.
yeah.
Anytime someone says that they went to MBA while working, you're like,
yes, that's
my
true.
EQ took a hit, I'd say, during those
Oh, yeah.
couple of years. But but first of all, I want to also appreciate you for your backdrop, all that Met stuff that you have up in your background. I appreciate that.
I'm a core, like, of course, unfortunately, core Mets fan. I was born into that, but what are you gonna do?
But yeah, it's cool. Like in your years, I'm gonna ask you a question about the equity research, like that field. How has that changed and remained the same from, say, early 2000s till today?
Yeah.
And what have you done consistently throughout that's been kind of like, this works?
So it's like, no, thanks for the question. It's and let's go, Mets. To me, it was like, it was a much more like, in the early days, I think it was much more like data-centric, spreadsheet, very disciplined valuation, despite like .com, like especially after like .com bubble and from like 2001 to like 2011, 12, like that was like 11, 12 year period. Like, you had to basically stay within a band. I think it always has been the one where if you do work off the grid, you can pick the stocks that maybe others aren't seeing. I think to me, my theme is always trying to be like out of the box, confident in my own ability, despite maybe sometimes like things going against you. And like I think the more winners you have and the more success, you become more emboldened. But then again, like when you have like a lot of times I think I've been more my failures, I've learned more from my failures and my successes. And also I think part of it is like it's evolving with the industry. I think too many people like they they stick to exactly what they've done. I've been able to like evolve quicker, maybe seeing where things were going in the industry. So I think that's probably been like, for me, like, you know, like at least my DNA.
Okay, thank you. So I have one last question. That's the most important question. But before that, I want to thank Khadija, Gul. Where is Gul? Is outside.
Thank you.
Yeah, thank you for organizing all this.
Dude, look at that.
A lot of work.
Look at that. Look at that shirt. That's a colorful. I mean,
yes.
Dude, what could have been, man?
I know, I accept, but I have to ask you this question.
Exactly.
I know your view because you've already stated that in public. Tesla shareholders approved $1 trillion package for Elon Musk. At the same time, we have shut down and people, many of them, they can't feed their families. How does this coexist? Not only this, I was in Los Angeles. Isaac, you were there. You have all these robots going to deliver food.
Yeah, that's one of the companies I cover, sure.
Oh, really? And then you have this robots covering and you have homeless people, it's bypassing them.
Yeah.
How do you rationalize this in a political system that is getting very, very dangerous, where billionaires are evil, making money?
I mean,
how do you rationalize this?
I mean, first of all, it goes back to like, I've never tried to play like like for me, I've always had much more of a like, of course, like understanding everything I'm like socially or politically or whatever. But then part of it is like I'm able to separate out, be like, how do you pick stuff? So to me, I've been always able to like separate out, and I've never done the like Hallmark card type stuff, like, oh, but what about this and that? Because my job is really to create like but to some extent like with Musk, it's like, look, if you pay someone $1 trillion and they're gonna get shareholders 3 to 4 trillion, people make that bet all day long, right? And it is, but it does speak to like, look, it is a society. It's like whatever you call it, like it's like more like have not, have you want to. But I'd argue on the other side, like, do you know how many people around the world that like maybe they had like blue collar jobs or some work that posed they're hardworking teachers, and then because of like stocks, now they're like what color Bugatti they should have. So the point is like stocks has also given so many people that I know around the world the ability to like, you know, people come up to like, oh, I worked in like government, like, oh, that's so nice, like, yeah, 30 years, like, but actually I own like 80,000 shares of, like Nvidia. I'm like, what the so there's so many like not like millionaires next door, it's like 25 million, like whatever, like worth like the point is that stocks have also given so many people the ability to do that, but there's other people have to, you know.
So you separate your investing objectives,
my thing,
social.
Because I could do things I could like donate to charities and I do my things personally, but then a lot of like when it comes down to like stocks, it's almost like it's no different than like an athlete like playing like a football game where you almost like separate out and be like, my job is to ultimately make people money.
You know, thank you for being honest about it, because a lot of people are confused.
And look, it's like, I mean, like I've had kids. I'm like, dude, like when we like, you know, I remember like there have been a lot of situations like that, especially with like politically, whether it's Trump or this. And the reality is like I don't care. Like for me, it's like if you're like left wing, right wing, I just view it as like, how do you figure out the landscape to make you money? I mean that's really like what like my role.
No, thank you for being honest about it, and that probably actually deserves more thank you than anything else, because people try to hide that. Thanks. And I know Isaac is going to meet with you. Now that you made all the money with NVIDIA and Ives, Isaac will be in touch with you. Okay. But thank you. We will, I know we have few minutes. Anybody wants to come and
we can take
chat.
pictures and
Yes.
stuff. Yeah.
Thank you. Thank you.
Thank you so much.
Thank you.